Controversial trade. Today, we're going to talk about dirty old coal and why I feel it actually has some opportunities ahead of it in the next couple of years. Now, this is a controversial trade for many reasons. First of all, the industry's been under pressure recently, both for the eco reasons and also just plain old growth of demand. Now, demand is there, but growth has been shrinking. So for these two reasons, coal has not been on the top recommended list of most analysts, including myself. But I think right now there's a potential opportunity on coal for those who are willing to take a little bit of risk and don't mind trading rather than investing. So let's take a look at my controversial trade and the argument behind why I think coal might have some near-term opportunities. My name is Keith Richards. I'm President, Chief Portfolio Manager at ValueTrend Wealth Management, and this is the Smart Money, Dumb Money Show. Let's get at it. So first thing I want to do is just show you a quick clip taken right from AI talking about coal's growth, the growth of coal usage in manufacturing in the world. And coal demand has been growing, but the recent growth was only 1.2%. And compared to a few years ago where it was growing more like the 4 to 5% growth rate, it's obviously been declining on a percentage basis over the years. But that does not mean that demand has disappeared. In fact, as they're saying here, demand is set to remain relatively unchanged in 2025. And that's due to electrical demand. So we're going to talk about that right now. And that's where I see the opportunity, at least over the next couple of years. So let's take a look. Well, first off the bat, I want to talk about the biggest users of coal in the world. And they are, of course, China. And I think that probably comes to no surprise to any of you guys, as well as India. Third place is the United States. If you add these three guys up, it's about 70% of the usage and demand for coal comes out of those three countries. And one of the things that we can talk about here is, before we get into my main reason for liking coal in the short term, is that all three of these countries are seeing significant population growth. With population growth comes demand for energy. And if you're living in China and 50% of your usage is going to be coming from coal or more, then you know coal demand is not going down anytime soon for China. Now I want to talk about the real reason why I like coal and where I see a 1 to 2 year trade on this commodity. Well, maybe some of you guys heard that Trump wants coal to be on the forefront in development in the United States because of the need to power AI centers. Now, let me explain what he's talking about. See, coal has been very depressed in the United States. In fact, I have a friend who is a venture capitalist, and he actually invested in a coal mine company in, I think it was Kentucky. And he said it's basically been dead air for quite some time. There's no real growth and development happening yet. However, you guys are aware that there is massive need for power as AI develops, and many of you may be interested to know that good old crypto and Bitcoin are also huge power demanding entities. So that, along with population, has been the biggest reason for demand for power over the coming years. Now, I'm going to just present you an argument as to why coal will fill that gap. So the main reason is that we all know that nuclear energy is the future for energy in North America and probably the rest of the world. But a nuclear reactor, a full-size reactor, takes 6 to 8 years from start to finish to develop. That's a long time, and they're not developing these nuclear reactors fast enough to meet the massive demand that is coming out of AI and Bitcoin and whatnot power usage, let alone the population growth that we have seen in North America. So with that in mind, coal is going to fill the gap. Now, some of you guys may be aware that some of the individual technology companies have gone ahead and started working on their own small reactors to power their AI development. Still, this is a 3 to 5 year project to get even these mini reactors, I believe they call them, up to speed. So there's a gap to be filled, and that's why President Trump came in and suggested that coal could fill that gap, even if it's just on a temporary basis. If we take a look at the usage for coal in the past few years, you can see that electricity, electrical power, surprise, surprise, has been the biggest use for coal in the past number of years. In fact, look at how it arced up over the past number of years. Again, population growth, AI, Bitcoin, that kind of thing. So when we buy into the argument that maybe coal has a place to expand at least over the next couple of years, especially with an endorsement by the President of the United States, well, then we've got to look at where is coal being developed. Well, interestingly, I was driving through Pennsylvania with my wife about 2 months ago, and there was traffic on the main highway that we were driving on Highway 95, I-95. So we had to go off the highway using good old Waze to tell us where to go. It brought us on this twisty-turny back road, and what did we drive by but this huge coal mining facility? So it's definitely out there. So as this little display shows you, that it's produced in Virginia and Kentucky, which is where my venture capital friend holds an investment, but also Pennsylvania, Illinois, and a number of other states. So U.S. does have a presence in coal mining, and so that's where we're going to be looking for our potential investments. So the first thing we'll look at is the Dow Jones Coal Producer Index. Now, what you're going to find in a couple of minutes is there's a real discrepancy between different coal mining stocks, and they're not all equal. But as an index, you can see that since 2022, the mining stocks have had a tremendous lid on them. So that's 3 years of going nowhere. But there's been a pretty nice trading range that for those of you who are willing to move with the market, you can swing trade this index or individual stocks within that index. So it's pretty obvious. It likes to move from about 350 to about 600 over and over. Sometimes it doesn't get all the way to the top, but there is a pattern here, and this is called a swing trade. The thing I want you to notice is it's just bouncing off of that 350 point on the index, and the potential is we could see a rise into the 500 to 600 area. That's not a bad move. Now, the other thing I want you to notice is that the major swings on this index are shown as bullish crossovers by the MACD. Guess what is happening right now? We're seeing a bullish crossover on the MACD. So there are technical reasons for looking at this trade beyond the fundamental reasons that I just mentioned. So now I want to look at 4 of the largest coal mining stocks that you can buy on the US stock exchanges. Now, I'm going to start off with the 2 that I dislike, and then I'm going to get into the 2 that I like. So let's take a look first at what not to buy. So what I'm showing you here is Core Natural Resources. Now the ticker is CNR, which may confuse people because it's not CN like our Canadian stock. It's Core Natural Resources. And what you can see is it was in an uptrend, and then as the industry went flat, so too did this stock. Now it's recently broken its support point, and it's consolidating just below support. It is a big company. It's 3.6 billion. It's not massive, but it's big enough. But recent earnings report showed declining earnings, and they also did a new issue of shares not too long ago. That can be very dilutive of earnings for the future. So there's a reason why this stock has broken down and is going nowhere. I'm not a big fan of this stock, but I thought I'd show you. You've got to be aware of the fundamentals and the technicals when you're looking at individual stocks. Now let's talk about my second least liked coal mining stock, and that is Peabody Energy. Now, I love the ticker, if nothing else, BTU. Come on. How'd they get that one? It's a relatively small company, 1.6 billion in market cap, and they recently issued a profit warning. Well, right off the bat, I don't like buying companies with profit warnings, even if I'm a technical guy. And by the way, the technicals show you that there's not a lot of good happening on this stock. It may be reviving a bit. I would think that the most it could get back to is the old support level, but I just don't buy companies that are shooting out profit warnings. So let's now go on to my two favorites. Okay, so now for the first of my two favorite coal mining stocks. And the first is Natural Resource Partners, NRP. And it's still a relatively small enterprise at $1.2 billion, but it's a royalty stock. And the good thing about royalty stocks are that they have much more reliable dividends. So this particular stock does pay a 3% dividend. And in researching the stock, I found that its general consensus by analysts is that it's a steady player. And it certainly has shown that. Its uptrend turned into, I guess you could say, either a gentle upslope or a consolidation, both of which are okay for most investors, particularly those who are just looking for the distribution. Okay, drum roll please, because now we're down to my favorite stock of the group. This is not a recommendation. I don't own it myself. This is an appropriate play for those of you who are willing to take on the risk of an enterprise that may be in a decline over the coming years. As I noted at the beginning, all of these plays must be considered as a near-term 1 to 2 year play and not likely a 10-year play. So Alliance Resource Partners, ARLP, on the New York Stock Exchange is a decent capitalization at $3.4 billion. So I like stocks with high capitalization because they're going to be more liquid. The next thing is that they have a lot of forward contracts on their coal. In other words, the pricing is fixed no matter what happens to coal. And if anything, they can renew and do new contracts if prices increase, but they have some fixed contracts that guarantee them sales over the coming years. So that's a good thing. And guess where their focus is? Their contracts are with Bitcoin and AI power generation. So I think this is fundamentally the best play of the group. It's got a 3% dividend. It's not a royalty, but still, I think that's probably going to be reasonably steady, at least for the next few years. And it is in a consolidation, as you've seen on a few of these charts. So the bottom line with all of these stocks are that they're all kind of consolidating at this point. The only two I'd be looking at have been the last two I just showed you, and I would be making the bet on a breakout from these consolidations if, in fact, Trump follows through with his endorsement of coal manufacturing. I think it's a highly likely chance that will happen based on the reality of the need for bridging the gap in power between where we are right now and when we have enough nuclear power. So I think the near-term play is going to be through coal, and we have an endorsement by the president. So, quick summary. Coal is still in demand due to world population growth, particularly in North America, where there's high energy usage, as well as the traditional users of coal, China and India. But the other thing that really matters is bridging the gap between the power needs of AI, Bitcoin, crypto, all that kind of stuff, and the ability to develop nuclear reactors, which has a time lag on it. So we have an endorsement from the President of the United States to produce and develop coal for the next number of years until that gap can be filled. And the only risk I feel is the speed of development in nuclear reactors. So there's probably that to consider when we think about buying coal as that bridge, because the bridge may be shorter than we think. Nevertheless, based on population growth and whatnot, we will need to develop these larger nuclear reactors. And the world was a little bit slow on catching on to that idea. So I think there's going to be a lag, and that lag will be filled by things like natural gas and coal. So, food for thought. Just throwing ideas at you. I hope you got something out of this one. You got to keep a lot of ideas in front of you to make decisions on investing. There's no right answer. Don't forget that I'm on the Money Show on Wednesday, May 28th. And that's going to be at 9:30 a.m. Eastern Standard Time. If you want to attend the webinar, all you have to do is go to the ValueTrend website and click on one of my blogs, the most recent blog. And I always have at the bottom links to allow you to get registered for any of the webinars that I participate in. Final thing is, don't forget to like and subscribe, because I've noted in the past, my associate and assistant, Rebecca, is looking forward to a raise when we hit 20,000 subscribers, and we're getting there. So please help out. Thanks very much, and we'll see you next time. Hey, thanks for watching. I hope you got value out of this episode. Please like and subscribe below. We're trying to grow the channel, and it would really be doing us a big favor. I'm presenting ideas every week on trades that we're actually looking at ValueTrend. And by the way, I don't just talk the talk, I walk the walk. I have been a portfolio manager for 35 years. And in fact, I was one of the very early pioneers in technical analysis here in Canada. On my website, valuetrend.ca, you will see a link for our online trading course. And this course is a complete money management system. I do encourage you to take a good look at that and consider taking it. I priced it extremely low because I want retail investors, that's you, to take the course and get value out of it. It's literally my 30 plus years of experience put into one complete step-by-step course. And honestly, I wish that I had had something like this when I was an early investor. It really will stop you from making so many mistakes. I also suggest you subscribe to our Never Miss an Opportunity program, which is our blog and our newsletter. There, you're going to get ongoing ideas, tons of charts, lots of trading ideas. And by the way, we never, ever solicit. We don't send you junk spam and stuff like that to try to get your business. It's for information, because part of my passion is to teach retail investors how to invest properly. I've been doing this, as I said, for 35 years, and I hope that I'm able to pass on some of the things that I've learned through this career as both a pioneer in technical analysis in Canada and a longtime portfolio manager. Thanks for watching. Don't forget, push like, push subscribe. See you next time.